In this video, I'm going to show you exactly how to place a cash secured put step by step. We're going through what I click, what I look for, and how I personally think through the trade before I place it. Just a quick reminder before we begin, this video is for educational and informational purposes only. This is not financial advice. Anytime you're dealing with investing or options, make sure you do your own research and make your own decisions. Today, I'm going to walk you through exactly how I place a cash secured put step by step. We'll start with the chart, then we'll move into the options chain, choose the strike price and the expiration, check the return, and finally review the order before placing the trade. This is an execution focused video, so the goal here is to show you exactly what I'm looking at and how I'm thinking when I'm taking on a trade. So first, let's start with the chart and make sure the setup actually makes sense. Now, before I even think about selling a put, I want to make sure it's going to be on a stock that I actually want to own. So I'm not starting with the premium, I'm starting with the chart. So a couple of things I'm looking at here. I'm looking at the overall market trend in the structure of the market. This is the SPY, and right now we're seeing basically a V-shaped recovery, a big gap up here, a little bit of a down day here, but overall I like that we're in basically a recovery stage. We can see possibly it coming back down, returning through this gap. But I like the overall trend of the market. Okay, check. Palantir is a company that is fundamentally perfectly sound in my opinion. It checks all 7 of my fundamental boxes, and that's what gave me the idea first to even start looking at the chart. On the chart, there's 3 down days in a row. This is all due to news that, in my opinion, is kind of BS. It's a short position seller that has a lot of influence that made this move happen. I like to see that we're also in almost oversold territory on the RSI. This is the MACD. I like to see a MACD crossover where the blue line crosses over the red line like it did back here. And I also like to see the histogram moving up. But in this case, with this doji candle suggesting that the sellers have been exhausted, the buyers are stepping in, defending this position, I can see a potential for a bounce, at least back up to this point of control here. And we also eclipse the bottom of the Bollinger Band, which also tells me that we're in an oversold type of territory. So we got news driven on a good fundamental stock. We have RSI oversold conditions, high volume node that suggests we're on possibly a reverse here at support. Those are the things that I look at when I'm looking at a trade. So this kind of setup is what I'm looking for. If I've got a stock and that I'd be willing to own, I got support area that I can work with. I've got at least enough chart structure to justify checking the options chain. So now let's see if the actual put is worth selling. Now that the chart makes sense, the next step is choosing the actual contract. This is where I start looking at delta, strike price, and how much premium I'm going to be paid for the risk. So in general, I usually start around that 0.2 delta area. If the setup is especially strong, I might go a little higher. And if it's not so strong, I might go out a little bit further for a little bit more safety. The key is to not chase the premium. The strike still has to be at a level where I'm comfortable owning the stock. Now that I like the chart, I want to see if the options chain is going to actually give me a trade that's worth taking. So this is where I start comparing time and strike. I'm going to go over this really quick. This is the options chain. We're on Thinkorswim, and we're on a simulated paper trading account just to show you how this works. You put your ticker here on the trade. We're looking at Palantir. Now, earnings is coming up on May 11th, so I want to place this trade around that date. My thesis, or my trade plan would be to be out of this trade before earnings. So what I'm going to do is I'm looking at the May 15th strike on this, the expiration on this. So I'm going to click on the May 15th expiration. This gives you the options chain. You got calls on the left, you got puts on the right. Here's puts, there's calls, okay? Now, what I'm looking for, we looked on the chart and we saw that there was a support around 120, and we liked that 110 area for a safe play. So you go down to your options chain. Here's your strike prices, okay? You're on the put side because we're going to be selling a put. This is the options chain. This is the price. These are the prices that we're looking at, okay? Bid and ask, that's our spread. And because we're selling a put, we're looking at the bid side. So we're looking at all of these here, okay? So here's your 120, 115, 110. So I don't always chase the biggest yield. I don't always chase the biggest, the largest amount of money. I mean, you can go, up here and get some serious money, but that's not what we're here for. We're trying to be consistent traders. So I always look at the 0.2 delta. So this is our delta column here. This is our 0.2 delta. This gives us an 80% chance that this would expire worthless. Okay, and that's kind of what we're looking to do. I'm also, if we do get assigned these shares, I'm okay buying 100 shares of Palantir at $110 based on my theory and the chart that we went over. So I still am very fond of this area between 120 and 110. To be a little bit more conservative, the way I usually trade, I look for the 0.2 delta, which is this. So when you're ready to place this trade, you're going to click on the bid side, the $365 right here. Okay, and I say $365 because in options worlds, everything is multiplied by 100. Okay, so you're getting one contract, and it says -1 because we're selling it. You're selling the May 15th, 2026 expiration. The strike is the 110. I'm selling a put, and I'm going to receive $365 to place this trade. Once I'm satisfied with this, and before I place this trade, I want to make sure that the return actually makes sense. For me, that usually means checking the annualized return on capital. In general, I'm looking for around 30% or more annualized. But that doesn't mean I force bad trades just to make the math look better. The chart has to make sense. The strike has to be one I'm comfortable owning, and the premium still has to justify the capital that I'm tying up. This is where I make sure the trade is not just possible, but it's actually worth trading. Okay, and I say $365 because in options worlds, everything is multiplied by 100. Okay, so you're getting one contract, and it says -1 because we're selling it. You're selling the May 15th, 2026 expiration. The strike is the 110. I'm selling a put, and I'm going to receive $365 to place this trade. Once I'm satisfied with this, and before I send the order, I want to slow down and make sure everything is correct. I check the strike, the expiration, the number of contracts, the credit I'm receiving, and how much cash is actually going to be required to secure this trade. I also want to make sure that the break even makes sense, and most importantly, that I'm truly comfortable owning the stock if I get assigned. This is one of the most important parts of the trade because once you click send, the obligation is real. You come over, hit confirm and send, you get this ticket. Now the ticket simply tells you what you're going to get. You're selling to open this contract. This is your break even. This is your max profit. If the Armageddon happened and the world was to blow up tomorrow and Palantir went to zero, this would be the max loss. That would be that Palantir completely went insolvent and lost everything. Basically, zero chance of that. And this gives you also the amount of cash that you're going to need from your broker to put on this trade. It doesn't mean you're risking it necessarily, but if the stock price were to fall below or at 110, you're going to have to buy 100 shares at $110. This will be held from your broker to make sure that you'll be able to fulfill that obligation with the buyer. Once you're satisfied with your ticket, I'll make sure that I check one final review for this before I actually hit the button. I check the strike, expiration, contract count, the credit received, cash required, and whether I'm truly comfortable owning this stock if I get it signed. That's it. You just simply send that in, and now we're just waiting for a buyer to take this contract. You can check over here. You'll see that it's a working order because it's Saturday today. The markets are closed. If this were a Friday, this would have filled pretty much right away. Anytime that you choose a strike that's on this bid, that's basically telling you that there are people that are willing to buy this right now. In fact, about 10,765 of contracts that would take that. So it would fill instantaneously when you hit that. This is also a higher volume. So you have a lot of open interest. You have a lot of volume. So this 110 is a major area of people that are watching. Also the 100 too. You see a lot of open interest here and a lot of volume here at that 100 level. And that is how you would put on a trade in this. So at this point, I've gone from liking the chart to identifying a contract that actually fits my setup. The next step is to make sure the return makes sense and to review the order before I place it. That was the ticket that we made. And once the trade is on, I already know what I'm looking for. If I get around 50% of max profit fairly quickly, I will exit that trade. If I get closer to around 80% at any time, I'll usually take the win and move on. For me, it usually isn't worth staying in the trade just to squeeze out the last little bit of the premium. And in general, I prefer not to do a roll unless there's a very specific reason. So let's quickly recap the process. Start with the chart, not the premium. Only sell cash secured puts on stocks you'd actually be willing to own. Look for support, MACD confirmation, the market context, then choose an expiration and strike price that fits the setup. Make sure the return justifies the risk, and review the order carefully before placing the trade. That's how I personally think through and place a cash secured put step by step. In the next video, we'll go one step further and talk about what happens after the trade is on. That includes how to manage the position, when the assignment matters, and how to think when the stock starts moving against you. So if you want to understand what comes after the entry, that's the next piece. If this helped, subscribe to the channel and follow the series. And if you have any questions about cash secured puts, leave them in the comments below. Thanks for watching. I'll see you on the next one.